to the chat box, and I'll be able to help you out. Like I just said, please, we've already got some questions coming through the Q&A box, so please enter them in there. We'll answer those at the end of the presentation. So we know you didn't come here to listen to me, so I'm going to introduce to you our two speakers for today. First, we got Patty Fulton. Patty started with the Department of Revenue in 1984 as a clerk for the Department's revenue agents. In 87, she became a revenue agent, collecting past due taxes in the Des Moines area. And then in January of 95, she became an examiner for the department. Then, I skipped a line there. So in December of 1995 is when she became a Taxpayer Service Specialist. As a Taxpayer Service Specialist, she assists taxpayers on a wide variety of tax issues, as well as educate taxpayers about Iowa law and rule changes. She is going to be covering the first part of the presentation on the legislative update, correct?
That is correct.
All right.
Yes.
And our second presenter today is Jennifer Breed. Jennifer has been employed with the department since 1982, so she's beaten Patty out by a couple of years there in a variety of capacities. She's worked as a seasonal income tax editor, and then she rejoined the department after graduating from Drake, which being here, you and I am sure is lovely for her. She has performed the duties as a revenue agent, revenue examiner, and then also as a taxpayer service specialist since 1994. She focuses on individual tax, income tax, inheritance, and fiduciary taxes, and the assistance of taxpayers to educate them about Iowa tax and rule changes. And she will be covering the majority of the NOLA today, correct?
NOLs, you bet.
All right, NOLs. So without further ado, I will turn it over to Patty to get us started.
All right, thank you, Patrick. My presentation today will provide you with an update on the 2016 legislation. In this session, there were several changes made that did affect a variety of taxes. We will review these changes beginning with the update on income tax. House File 2433 updated the Internal Revenue Code IRC bill. The updated references in this bill is for the 2015 tax year only. The most common federal provisions that Iowa coupled with is the Section 179 expense and the extenders, which include the educator expense, tuition and fees, and itemized deduction for sales tax. Iowa did not couple with the federal bonus depreciation. So if you will be claiming the bonus depreciation on the federal return, when you prepare the Iowa return, you will complete the IA 4562A form, which is the Iowa Depreciation Adjustment Schedule. This form will assist you in computing the net adjustment for the depreciation that you'll report on the Iowa 1040 form. Facilitating rapid response to state-declared and presidential-declared disasters. This bill is a model bill that has been moving through several of the states. It was enacted to facilitate rapid response from out-of-state businesses and individuals who perform disaster and emergency work related to state-declared or presidential-declared major disasters in Iowa. The earnings from this work performed is exempt from income tax and state withholding. No Iowa returns will be required to be filed. The disaster and emergency-related work is associated with repairing or rebuilding critical infrastructure that has been damaged or destroyed by a state-declared disaster or emergency. Some examples of the critical infrastructure that would be affected would be your communication networks, electric distribution systems, or your water pipeline systems. The disaster response period begins 10 days prior to the state-declared disaster or emergency and ends 60 days after the state-declared disaster or emergency. This bill goes into effect for the tax years beginning on or after January 1st, 2016. 529 plan changes. The Iowa College Savings 529 plan is available for individuals to contribute funds to their beneficiary's college. This will assist for future higher education costs. The contributors for the 529 plans would be individuals, individuals' representatives, estates, and trusts. Beginning on or after January 1st, 2016, nonprofit organizations that are covered under the Internal Revenue Code 501c3 will be added to the entity list and can make contributions to the 529 plans. Individuals can take an itemized deduction on contributions that they make to nonprofit 501c3 organizations if the contribution does not benefit directly their dependent. If the contribution by the individual does benefit directly their dependent, there could be a potential limitation on the deduction. Now we're going to move to tax credits and incentives. Solar Energy System Tax Credit. The Solar Energy System Tax Credit is still one of the most popular tax credits that the department has. To apply for the Solar Energy System Tax Credit, you'll need to complete an application by May 1st in the year following installation. The applications are online and can be accessed through the department's website. This bill was updated with a provision in place for the 2014 and 2015 installations, where the applications are received after the May 1st due date. These applications will be considered on a first come, first served basis on the next available year's allocation. For the 2016 and 2017 and after installations, where the applications are received after the May 1st due date, these applications will be denied. Renewable Energy Tax Credit. The Renewable Energy Tax Credit allows purchasers and producers of renewable energy to take a tax credit on their income tax liability if they meet specific requirements, which would include that the solar facility is located in the state of Iowa and that it is approved by the Iowa Utilities Board. And previously, these facilities were required to be placed in service between July 1st, 2005 to January 1st, 2017. This bill was updated to now include facilities placed in service before January 1st, 2018. There also is a change in ownership requirement for the solar facilities, which states the ownership will be directly or indirectly, in whole or in part, owned by an electric cooperative that is described in Iowa Code 476C. And then last in this bill, there is a clarification on the criteria for the residential energy facilities to where they must have a generating capacity of 1.5 megawatts or less. Geothermal tax credit. The geothermal tax credit currently claimed on the Iowa return is 20% of the federal tax credit residential energy efficient property. This federal tax credit is set to expire December 31st, 2016. Since the department is unsure whether this tax credit will be extended, the Iowa geothermal tax credit was created and will not be dependent on federal law. The Iowa geothermal tax credit is 10% of the qualified expenses on equipment that uses the ground or groundwater as a thermal energy source. If the federal tax credit is extended, then the 10% Iowa geothermal tax credit will not be available. However, if the federal tax credit is not extended, then the 10% Iowa geothermal tax credit will be available for the 2017 tax year. The 10% Iowa geothermal tax credit is not available in the years that the federal tax credit is available. Adoption tax credit. The Iowa adoption tax credit is available to individuals to deduct an amount equal to the first $2,500 of qualified expenses related to the adoption of a child adopted in Iowa. Beginning on or after January 1st, 2017, the adoption expenses will increase from $2,500 to $5,000. Iowa will follow federal guidelines as to what adoption expenses will qualify, and this is defined in the Internal Revenue Code, Section 23D1. New this for the 2016 year is the Iowa Adoption Tax Credit Form. This is the IA-177. It is split in two different sections. First part is requesting information about your eligible adopted child. And the second part will request or have questions on the Iowa Adoption Tax Credit calculation. Renewable Chemical Production Tax Credit. The Renewable Chemical Production Tax Credit is a new credit that will become available beginning on or after January 1st, 2017. It is available to eligible businesses such as ethanol plants that have an excess waste product called biomass feedstock. To be eligible, the business must convert the biomass feedstock into a renewable chemical that makes a usable product. The usable product cannot be sold or used in production of food, feed, or fuel. Examples of the biomass feedstock would be sugar, grease, fat, or oil. This tax credit will have an annual cap of $10 million a year, and it will be administered by the Economic Development Authority. Renewable fuel tax credits. All four of the biofuel tax programs that are set to expire January 1st, 2018 will be extended to January 1st, 2021. The four biofuel tax types are E15 plus gasoline promotion tax credit, the E85 gasoline promotion tax credit, the biodiesel blended fuel tax credit, and the sales and use tax refund for biodiesel production. The first three fuel tax credits are available to retail dealers, and the credit will be based on the total number of gallons sold. The sales and use tax refund for the biodiesel production is available to biodiesel producers, and the refund credit is based on the biodiesel they produce with a maximum limit. The ethanol promotion tax credit is still scheduled to expire on January 1st, 2021. Biodiesel blended fuel tax credit. The biodiesel blended fuel tax credit will have changes made to the credit amount that will go into effect for the tax years beginning on or after January 1st, 2018. Diesel fuel rated B5 or higher, but less than B11, will be reduced from 4.5 to 3.5 cents per gallon, and the B11 or higher will be increased from 4.5 to 5.5 cents per gallon. Next, we have the legislative update on the sales and use tax. Beginning July 1st, the sales and use tax exemption for certain computers, machinery and equipment, and replacement parts has now been extended to include supplies. And there are now definitions for both replacement parts and supplies, which previously was not provided in statute. Some background information. Prior to July 1st, 2016, replacement parts were exempt, supplies were taxable. Again, the replacement parts and supplies were not defined in statute. Beginning July 1st, 2016, House File 2433 amended the sales and use tax exemption to include supplies when used for an exempt purpose. Prior to July 1st, 2016, there was not a definition in the statute for replacement parts. The replacement parts were presumed to have a useful life of at least 12 months. Beginning July 1st, 2016, replacement parts are defined as tangible personal property other than computers, machinery and equipment, and supplies, regardless of the cost or useful life. The replacement parts must meet all conditions to be exempt from sales and use tax. To view these conditions, you can look at the PowerPoint. Beginning July 1st, 2016, we also have the definition for supplies. This is tangible personal property other than computers, machinery and equipment, and replacement parts. And for the supplies to be exempt, it must meet one of the conditions identified. These conditions are listed on the PowerPoint for you to view. We have a few examples of the exempt supplies that went into effect beginning July 1st, 2016. Again, remember, supplies used to be taxable. So a few of these exempt supplies would be your saw blades, drill bits, coolants, lubricants, to name a few. Bottom line, many but not all items used in manufacturing are exempt. Exempt items must be used in an exempt activity, example being directly and primarily used in processing by a manufacturer. The department recently posted on our website the publication Machinery, Equipment, Computers, Replacement Parts, and Supplies, Changes effective July 1st, 2016. To view this publication in its entirety and to obtain further information, go to the link provided on the PowerPoint. Legislative update for environmental protection charge. The environmental protection charge is a 1 cent per gallon charge imposed on all petroleum products deposited into a non-exempt storage tank in Iowa. The environmental protection charge is set to expire December 31st, 2016. Previously, the EPC charge was set to expire June 30th, 2016, but was extended at that time to be December 31st, 2016. The final EPC return will be for the quarter ending 12/31/16 due January 31st, 2017. There will be no further collections on the EPC charge thereafter. This concludes my update on the legislation for 2016. I do have some other information that I would like to go ahead and bring to your attention. Beginning with standard deduction amounts for 2016. Filing status single, it will be $1,970. If you are married filing separately on a combined return or married filing separately, the standard deduction will be $1,970 for each spouse. For joint filing, head of household or widower, the standard deduction will be $4,860. College Savings Iowa 520 plan is $3,188 per beneficiary for 2016. Taxpayer Trust Fund credit amount. There must be a balance in the Taxpayers Trust Fund of $30 million or more in order for the trust fund credit to be available for that tax year. 2013 was the first year the Taxpayer Trust Fund credit was available. It was $54 for each eligible individual. In 2014, it was $15. 2015, it was $0. In 2016, it will be $0. Individual income tax checkoffs. The 4 existing checkoffs have been extended through 2018. Beginning in 2019, the department will revert back to the old system where the checkoffs will be reviewed every 2 years. The 4 checkoffs are Fish and Wildlife Fund, called the Chickadee Checkoff, the Iowa State Fair Foundation, Corn Dog Checkoff, Joint Firefighter Preparedness Fund, Veterans Trust Fund, and then the Child Abuse Prevention. The interest rate will be 0.4% per month during 2016. A side note, the updated figures for the 2017 tax year for interest rates, standard deductions, and college savings plans will not be available until later this year. E-filing statistics for current processing year, 90% of individual income tax returns were e-filed, 70% for corporation income tax returns, 22% for the fiduciary tax returns. For the fiduciary tax returns, 2016 was the first year that e-filing was available. 2D barcode. 46% of the paper returns use the 2D barcode. The fillable Iowa 1040 on our website automatically creates a computer-generated barcode on the return. The barcode allows the return to process faster than a handwritten paper return. Because the computer generates the barcode, all entries on the fillable Iowa 1040 must be made on the computer before the return is printed. If you need to make changes to the return, update the fillable form and reprint. Handwritten information is not captured. Any information written on the return after it is printed will not be reflected on the barcode. W-2s and 1099s, there will be a new requirement to submit W-2s and 1099s electronically to the department. Again, this is something that we need you to watch for details later this year. That's all that I have for other information. Now what I'd like to do is hand this off to Jennifer Breeden, and she will go ahead and provide you information on net operating losses.
Thank you, Patty. This session will provide a basic overview, which is going to be highlighting the computation and application of an Iowa net operating loss. The rules and regulations will tell you that net operating losses shall be allowed or allowable for Iowa individual income tax purposes and will be computed using a method similar to the method used to compute losses allowed or allowable for federal income tax purposes. Therefore, to understand an Iowa net operating loss, you must first begin to understand what is a federal NOL. The Internal Revenue Code defines a net operating loss as the excess of the deductions allowed by Internal Revenue Code Section 172 over gross income. Such excess computed with modifications specified in Internal Revenue Code 172 sub D. If you now have a quizzical look, or you are wondering, can I have a few more minutes to look that over? Let's go to the next slide, because perhaps a more easily understood definition of a net operating loss would be that an NOL is the excess of business deductions over gross income with special limitations applied. In general, a net operating loss is figured the same way as you would figure taxable income. You begin with gross income and you subtract the taxpayer's allowable deductions. But not so fast. Just because an Iowa 1040 has a negative figure for net or taxable income, that doesn't necessarily mean that there is a net operating loss. So, federal does have rules limiting the deductions which may be considered. And these are only some of the federal limitations, such as capital losses in excess of capital gains. These are not allowed. Prior net operating loss deductions are not allowed. They would act to, if allowed, to inflate the current year NOL. So therefore, you won't see them in the current year calculation. Then we also see that certain non-business deductions, greater than non-business income, are also limited, and that is what is crucial. They can be no greater than the non-business income, and certain examples of this might be alimony paid, IRA contributions, and most other non-business itemized deductions. Now, once again, these are only some of the federal limitations. Now, I do note that there are some notable itemized deductions which are considered to be business deductions when calculating an NOL. These are casualty and theft losses and employee business expenses. Iowa law further limits the deductions allowed when calculating an Iowa NOL. Iowa's pension exclusion and other miscellaneous deductions not related to a trade or business are limited. So when we look at this, when determining if a taxpayer has an NOL, the discussion of business versus non-business, standard versus itemized deductions, federal tax payments and federal refunds, and other adjustments become so important. Due to time constraints, we of course can't cover all of those in this overview session, and I do encourage you to review the resources set forth at the end of this PowerPoint that tell you many, many excellent resources. Now, there are two that just simply are not allowed. And by statute, the Iowa capital gain deduction is not allowed, neither is the Iowa standard deduction. The department has provided Form IA-123, Iowa Net Operating Loss Schedule, to assist in the computation and application of the Iowa Net Operating Loss. The Iowa 123 should be filed with the return. It is so helpful when you include that so that we can know what deductions, how you arrived with the figure that you came up with on the NOL. Now, the Iowa 123 does consist of 3 sections. The first or top section of the form is for the calculation of the Iowa net operating loss. Now, a helpful tip to keep in mind when you're looking at that top section, in the section that is designated as allowable deductions from net income, do keep in mind that lines 5A, B, and C should be entered on those lines as positive numbers. Now, the lower section of the form, which consists of parts 1 and 2, that's used to apply the loss established on line 7 of the Iowa 123 schedule. If line 7 on the Iowa 123 is a negative number, you have an NOL. Thus, just because an Iowa 1040 return is negative doesn't necessarily mean it is a net operating loss. And consequently, an Iowa resident should complete the first portion of the Iowa 123 to determine if an Iowa NOL exists. If that Iowa 123 line 7 is a negative and it's filled out correctly, then your taxpayer has an Iowa NOL. When applying the Iowa NOL to the taxable income of a carryback or carryover tax year, you need to make various modifications to establish how much of your NOL will be used up. The most prominent of these modifications may be as a result of federal changes due to the application of the federal NOL, which then can spill over into the Iowa 1040 return, or there can be specific disallowances, such as the Iowa capital gain deduction, which is said to not be allowed when calculating the NOL. Once again, refer to those resources at the end of this presentation. So let's look at the bottom of the Iowa 123 net operating work schedule more clearly and more closely. Focusing on the application section of the Iowa 123, Part 1 is used if the NOL will not be fully absorbed in the year it is being carried to. Only part of the NOL is going to be used in that instance. Part 2 is used if the NOL will be fully absorbed in the year it is being carried to. Now, there may be multiple Part 1s, however, there can only be one Part 2. Complete Part 1 each year the NOL is not fully used up. Complete Part 2 the year when it is fully used up. Now, a helpful tip for this part of the form is that note the starting point distinction between Part 1 and Part 2. Part 1 starts with taxable income, which is line 38 of the Iowa 1040. Part 2 starts with net income, which is line 26 of the Iowa 1040. Now, as discussed, an NOL is used to reduce taxable income in other specified tax years. After you have established that you have an NOL, you have to determine what to do with it. However, there are rules which will tell you to which year the NOL may be applied. An NOL is carried back unless the taxpayer also has a federal NOL and makes a timely federal election to forego the federal carryback. Do follow the federal guidelines for making this election on the federal return to waive the carryback period. In a nutshell, Iowa follows the direction of the federal NOL. Thus, the first question you should always ask yourself is there a federal NOL? And what direction did that federal NOL go? Because then the direction for Iowa is very straightforward. If the federal NOL goes forward, then the Iowa NOL goes forward. If the federal NOL goes back, then the Iowa NOL goes back. But where do we start and where do we end? If there is no federal NOL to follow, rely on the following on the screen as your guidance. Because since 1998, absent any timely federal election to waive the carryback period, the Iowa NOL is generally carried back 2 years. The NOL is applied to the carryback year and then forward to the next year. The taxpayer may carry forward any unused NOL for no more than 20 years beyond the lost year. However, there are always exceptions to the rule, and this is no exception. There are categories of losses which create an exception to this 2-year carryback rule, and that's if they have a casualty, theft, or presidentially declared disaster area loss. These are carried back 3 tax years. Farming also has a special carryback provision. Farming losses are carried back 5 tax years, but not to be outdone, if a farmer timely elected on the federal return to choose the 2-year carryback, then we must follow that. Or if they chose the 3-year carryback for a casualty, disaster, or theft loss in a presidentially declared disaster area on their farm, that too is a 3-year carryback. Unused losses that are remaining after application in the carryback year can still be carried forward, ultimately up to 20 years beyond the lost year. Now, examples of the application timeline for an Iowa NOL. We're going to presume as our base year that we have a 2015 Iowa NOL, the year of the loss. If this is a business loss, In this scenario, it would go back 2 years to 2013. If we have a casualty, theft, or presidentially declared disaster area loss, this will go back to 2012 because of the 3-year carryback scenario. And if we have a farming loss, where we presume there's no federal NOL where they elected the exceptions, then that 5-year carryback goes back to 2010. Any remaining NOL would go to the next tax year and thereon. One would skip the loss year when it comes up and simply go on to the next tax year. Any loss not used up by 2035, that 20-year carry forward, would be lost. Now, the statute of limitations for an NOL carryback is tied to the year of the loss. If the loss was generated in 2015, then the taxpayer has until April 30th of 2019 to file a timely claim for refund. This is the 3 years after the due date for the NOL loss year return. Now, do keep in mind, any elections made on the timely filed tax return that you are carrying the NOL back to are out of statute to change if that original carryback year is out of statute. Thus, if you have a 2013 loss year that you are carrying back to 2011, things such as filing status and the standard versus itemized deduction elections, those on that 2011 tax year are binding. However, if you have a 2015 loss year carried back to 2013, the statute is open for 2013. Any changes made to a carryback year in statute, though, can have unwitting results. A taxpayer typically, when they filed that return originally, made elections which resulted in the lowest tax liability. If a taxpayer decides to make an in-statute change, which at that point in the carryback year results in more tax, this may incur penalty and interest, which reduce a potential tax refund from that year. How can that be? Simply put, an NOL is not available to apply to a tax liability until the end of the tax year or the loss year when it was created. Thus, a 2015 NOL is not applied until 12/31 of 15 when it came into being. Any election changes resulting in increased tax on a 2013 tax year, for example, result in unpaid tax until 12/31/15 when the NOL from 2015 can be applied. Essentially, any NOL for 2013 would then be reduced by potential penalty and any interest resulting from in-statute changes. Now, when an NOL is carried back, the taxpayer must file an amended return for each of the carryback years that the NOL is applied to. Of course, the Iowa 1040X is the most common vehicle. However, one may also use the applicable carryback tax year, Iowa 1040. Simply boldly mark it amended and then include an explanation of why you are amending and a copy of the Iowa 123 net operating loss worksheet and any supporting documentation. Now we are going to look at some of the more troublesome areas and aspects of NOLs. Filing status for married taxpayers. Yes, there are rules specific to filing status and which taxpayer can make use of an NOL. This first scenario that I'm describing is probably the easiest of all scenarios. And in a perfect world, this is all we would have to deal with. Because if the taxpayers filed jointly for all years involved in the calculation and application of that NOL, then that jointly calculated NOL is applied to the joint income. However, we do find that if spouses filed separately for all years involved in the calculation and application of the NOL, then the NOL of each spouse is applied to that respective income of that spouse, keeping each NOL and each spouse separate. If the spouses filed married filing separately for the loss year, but the filing status is joint for the application and all of the carryback or carry forward years, then you can still apply the NOL to the joint income. However, the most problematic issue is that I've left at the bottom. If the spouses filed a joint return for the loss year, but the filing status is married filing separately for the application in any of the carryback or carry forward years, then you need to follow the federal guidance on how to claim the NOL when there is a change in the couple's filing status. In summary, a married couple whose Iowa filing status changes for any of the tax years involved in that calculation or application of the Iowa NOL will need to follow the guidance provided by the Internal Revenue Service regarding changes in filing status. You are going to find that Federal Publication 536 is an excellent resource, and they lay out how to make those modifications and how to calculate the correct application. Now, another troublesome area is a change in marital status. And marital status changes due to perhaps death, divorce, marriage. They can result in an unwitting problem because in the calculation or application of the Iowa NOL, it requires the NOL to be applied only to the income of the taxpayer who incurred the NOL. And so that old saw, once again, go back to Federal Publication 536. They will give you exhaustive detail. Now, finally, the last troublesome area that we will touch on arises because of Iowa's application of the NOL after net income. By Iowa code, the NOL is applied after the calculation of Iowa net income, after line 26 on the Iowa 1040. The reporting of the Iowa NOL on line 24 is a matter of expediency only because there just simply is no line to place it on after net income. So any calculation or proration based on net income is not changed by the application of an Iowa NOL to a tax year, such as itemized deduction proration. How those itemized deductions were prorated originally on the return before the NOL carryback is the proration percentage that remains after the NOL is applied. So if the proration was 40-60, with spouse A having 40% and spouse B having 60% after the NOL, doesn't matter. It is still 40% spouse A, 60% spouse B. The low income calculation and Iowa alternate tax. Do keep in mind that the low income calculation and Iowa alternate tax calculation are determined before the application of the Iowa NOL because they relate directly to net income. And then finally, credits based on Iowa net income. These are not recomputed. The child and dependent care is an excellent example. That credit is based on qualification determined by net income. And net income, of course, did not change due to the NOL. Now we come to the fun part of the presentation. While this presentation may have touched on a few of these points already, their frequency and showing up as often as they do as a problem, I would be remiss if I did not point them out as areas of concern. Iowa does not have a 1045 application for tentative refund. So whoever sent me that email yesterday, you get a gold star because it just reinforced that we needed to apply that to this presentation today. And then you use simply the 1040X or an Iowa 1040 boldly marked amended. I have seen a few people try to use the Iowa 843 claim for refund form. That too is not the correct vehicle to use to file the amended return. Now, the Iowa NOL is generally not the same as the federal NOL. We wish it were, but most often it is different. And if they happen to be the same, count yourself lucky. A taxpayer cannot first carry the Iowa NOL forward without first timely electing to carry forward the federal NOL. Thus, if there is no federal NOL, you can't go forward. It must go back. And then finally, a taxpayer cannot elect to go forward on federal and then elect to go back on Iowa. This isn't a pick and choose option. Iowa must follow the federal election. Some more common areas of concern are the Iowa NOL must be applied to positive taxable income in a carryback or carryover year, even if there was no tax liability. So even if you're low income exempt in the carryover year, your taxable income will eat into the NOL before it can be carried over to another year. And probably an easy mistake to make, be sure to apply the Iowa NOL to either net income or taxable income as set forth by the specific parts in that lower portion of the Iowa 123. They are often used interchangeably, and do be focused. We do give instructions on the Iowa 123 telling you which line to use. Now, a taxpayer cannot simply take the negative figure off of the Iowa 1040. Oftentimes we see that happen. You can't just cut straight to the chase here. Neither net income or taxable income is the figure typically to use without first computing the Iowa NOL. And then finally, the Iowa capital gain deduction is simply not allowed in the calculation of an Iowa NOL by statute. Moreover, when you go to apply that NOL, the Iowa capital gain deduction is disallowed in the application year to the extent of any NOL. Finally, do keep in mind that non-business adjustments in the loss year are only deductible to the extent of non-business income. I always say the best thing to do is to establish your non-business income. It is the ceiling that your non-business adjustments cannot exceed. Now, prorating itemized deductions, this is probably the most common error, and probably why I've mentioned it a few times. Do not change your proration after the NOL carryback. Claiming the low-income exemption or alternate tax calculation only after the application of an Iowa NOL and then not fully using up the taxable income in a carryover year is not allowable. So it's not enough to get it down to the low-income exemption and alternate tax calculation benefit lines, because, of course, the NOL doesn't impact net income, and that's where low-income and alternate tax come into play. Don't use the Iowa standard deduction, please, in the calculation of the Iowa NOL. You won't see a line on that first part of the Iowa 123 because it is simply not an allowable calculation when trying to figure out if you have an NOL. And then finally, there is a special provision by statute that is a benefit for those with NOLs. Interest is generally calculated beginning on the date the amended return claiming a refund is filed with the department. So the sooner you get it in, the sooner that interest accrues while you're waiting for us to process. Now, there are special considerations that must be kept in mind when working with non-residents with Iowa NOLs, because non-residents or part-year residents may only claim Iowa losses to Iowa income. Therefore, when calculating the Iowa NOL, non-residents or part-year residents may only use adjustments, deductions, or federal taxes that are from Iowa sources. This means that the Iowa NOL for a non-resident or part-year resident is usually the loss amount reported on the Iowa 126. Occasionally, a non-Iowa taxpayer may find it to their advantage to prorate the federal taxes or itemized deductions and take those extra steps. However, itemized deductions are generally limited to those business deductions from Iowa sources. Non-business deductions are limited to non-business income. We learned about that earlier, and it's no different from an Iowa versus a non-resident. Because in most instances, an Iowa NOL for a non-resident, no itemized deductions will be allowed in computing the NOL. This is because most non-residents will have no non-business income reported to Iowa. There is a similarity between residents and non-residents. Fortunately, the carryback and carryover timeframe provisions are the same between residents and non-residents. So in summary, non-residents or part-year residents with Iowa NOLs may not claim an NOL on the Iowa 1040. It is claimed on line 24 of the IA 126 Iowa non-resident and part-year resident credit schedule. Similarly, a non-resident NOL becomes visible in the calculation of the Iowa 126. So when you put in that reduction for the net operating loss, it then changes and recalculates your Iowa 126, allowing for a larger non-resident part-year resident credit. Now, NOLs are complex topics, and there are rarely easy answers. I don't typically use the words simple and NOL ever in the same sentence. And for that reason, I encourage you to look at these resources that we have provided. As we said, the foundation of the Iowa NOL is based upon the Internal Revenue Service Code, Section 172, and Regulations 1.172. Iowa does not have a special publication dedicated to NOLs. However, Many of the questions are addressed by IRS Publication 536. Now, the specific Iowa Code sections that set forth the distinctions between Iowa and federal are found in 422.7, 0.9, and 0.25. And then finally, the Iowa Administrative Code, what we lovingly call the rules and regs. Those are found most pertinent to you will be Code 40.18. 40.38 sub 9 talks about the NOL and the capital gain deduction limitations. And then 44.3 talks about the interest special computation due to NOLs. And while not exhaustive, these above resources do provide a strong foundation upon which to build your knowledge of Iowa NOLs. And I would be remiss if I didn't say it. There are instructions to the Iowa 123. I do think that sometimes when we print off the 123 worksheet, we don't want to print off all the rest of those. So those do answer many questions, certainly not all. Now, I'm going to go ahead and pass my portion of the presentation back to Patty.
Thank you. I'm going to
Thank
go
you.
ahead. I'm going to go ahead, and since Jennifer finished up with NOL resources, I do have some other resources as well that I would like to provide for you before we finish up. I'm going to start with the Iowa Tax Research Library. Just recently, the department had introduced a new enhanced version of the Iowa Tax Research Library. Some features on the library may be under construction for a short time. This library will contain court decisions, rulings, and other information from the department's archives. The department has been updating their website since 2015. It has been a work in progress. The website is considered a responsive website, which means it provides optimal viewing experience, easy to read, and navigation. Hopefully you've had a chance to experience the website. The department would certainly appreciate any feedback that you may have. On the website, you will notice circled in red, subscribe to updates. Iowa has information they will email to you to receive automatic updates. The department has been using the Gov delivery system since 2015. This is a great way to stay informed by receiving updates. You can subscribe to the following topics: newsroom, tax information, e-file and pay information, due date reminders, statistical information, and electronic filing. The department now is using different social media platforms to reach out to taxpayers. Twitter is one of them. Twitter is a short message that is sent once a day. You may sign up to receive messages for business tax, income tax, and tax professionals. The number of tweet followers that we had from January 2016 through May 2016 was 831 followers. Number of tweet messages issued during that same time frame was 800. Number of recipients of tweet messages was 54,987. So evidently when it was tweeted, it was retweeted and retweeted. Like us on Facebook. Facebook also sends out a short message once a day. Number of Facebook likes are number of Facebook likes is from January 1st, 2016 through May of 2016 is 507. Number of Facebook posts that are viewed are 11,650. Purpose of this presentation is intended for general educational purposes only. Anyone involved in an audit or protest must contact the department representative they are working with on that issue. We do ask, I see that you have gone ahead and submitted questions, and we will begin working on those and get your response back as soon as possible.
Are there any that you want to answer live? So really quickly, we're going to look through this list of questions, see if there are any that they can answer live for you here today. If not, we will be able to follow up with you with the question and answer document that will come back to you after this presentation. So I'm going to scroll through this list of questions really quickly here. If there are any of them that you want to look at.
Well, the one that we had back up was on the bonus depreciation. Okay.
So Dirk asked, I would like to confirm if you are conforming to bonus depreciation for 2016 for individual taxpayers.
Okay. And Iowa did not couple with the federal bonus depreciation. And what we would do is have the taxpayer complete the Iowa 4562A form, which is the Iowa depreciation adjustment schedule. And that will assist in computing the net adjustment of the depreciation to report on the Iowa return.
And for 2015, but for 2016, we have to wait and see.
Right, 2016,
and see
yes.
what will be happening.
I apologize, I didn't see 2016.
That's
Thank you.
okay. I got you.
And the same with section 179. I think I saw a question on that too.
Yeah, we won't do that till first of the year.
So Jill, is this one you're talking about?
Yeah,
Greg?
yeah.
So Jill asked, have you heard anything about Iowa coupling with federal 179 for 2016?
We just don't know at this
No.
point. We have to wait for the legislature to act when they come back into session in early 2017.
So the voice from the corner of the room is Greg Stoke, who is here with Patty and Jennifer to help answer those questions too. So they will hear back on that one. We're just looking through the list of questions here to see if there are ones that we can answer live. We have recorded all of your questions, so while they're looking through the last questions, I want to thank everybody for joining us today for this legislative tax update and the NOL presentation. Our next presentation with the Department of Revenue is going to be October 27th from 12 to 1 p.m. and that's Iowa tax credits for businesses. So you'll be seeing a reminder about that, so be sure to come back and sit with us for that one. And as well, with that, I know it's just about 1 o'clock. The recorded presentation and the PowerPoint will also be available on IA SourceLink, where business begins in Iowa, where we connect Iowa business owners and other professionals to resources. So this will be recorded and posted there. We'll probably take the next couple, 3-4 minutes to see if there are any other questions we can answer. And then we will follow up with everyone else that asked questions with a more comprehensive answer once they've had time to go back and get you the full, complete answer. How does that sound? Okay. So in this list here, make it bigger for you.
So the one back up with Tracy.
Yep. So Tracy asked, so if there's a federal geothermal tax credit, Iowa is 0, or does Iowa revert to the 20% of the federal credit?
Right, so if the federal tax credit is extended, then the 10% Iowa geothermal tax credit will not be available.
But the
And
20%.
The 20%, we'll go back to 20% of the federal tax credit.
Okay. So I think this one will be pretty easy. So Karen Knight asked, in the past, we've not been able to electronically file the Iowa 123. Is
That
it
is-
available electronically?
That is up to the software. And
Okay.
I don't know as we have addressed which software will or will not be doing that.
Right. We have changed it from a worksheet to a schedule. So hopefully software companies will now support that form, but it is still up to each individual software provider if they do or don't.
Okay, so it's up to answer your question here, it's up to each individual software that you have. See, is that next one there? If there's no federal NOL, can the Iowa NOL be carried back 2 years?
It must be carried back 2 years.
Must be carried back 2 years.
So unless, of course, it meets one of the exceptions for a casualty or farm loss. But a general business loss, if there is no federal NOL with a timely election, it must go back, or if there is indeed no federal NOL.
Okay, so we'll look through, see if there's any other questions we've got in here. you see one that you want there?
I can wait on.
Okay. So Jennifer's been looking over a lot of the NOL questions, and those ones that we're going to come back with a more detailed answer for you, to make sure we're getting you the information that you need.
I can address Nancy Johnson's,
Okay.
where it says, if the Iowa NOL is applied after calculation of Iowa net income, why don't you add a line? It becomes problematic with real estate, and I wish I had more control, but we do not. So I don't any time in the future see that changing. It's not my call. Mine's greater than mine. Make those decisions as to how that Iowa 1040 is going to look.
Okay. So that's why there's no line beneath that calculation. Maybe one, Patty, for you, maybe the last one we'll do here. Are there any resources with details about how to categorize the income and expenses between businesses and non-businesses? Looking at anonymous here.
Okay. And that's regarding net operating. Is that income and expenses or each special categories?
In general, Iowa follows the federal guidance as to what is business and what is non-business.
Okay.
That's always your default. And then on the question where it says, where do we adjust the federal NOL that carries, you're going to find that the Iowa 123 net operating loss schedule sets forth how to arrive, and it talks about the Iowa perspective of the NOL. So we don't really take what your federal NOL is and modify it. You start with the Iowa net income and then modify it due to what is on the calculation.
Okay. So really quickly, we'll look through the last of these questions. A question came in, how will we ask the Q&As at a later time? They'll be posted out of source link, and I'll also follow up with all the attendees with it in an email to make sure that everyone gets it and that they'll be able to view it. So the Q&As will come in an email, I'm guessing sometime next week, once the department has had time to go back and answer the questions. So anything else in there we want to answer yet? Looking to my experts? Nope. Okay. So thanks again, everybody, for coming and participating in this webinar with us. You'll be able to see the recording and the presentation and Q&A up on SourceLink next week. Our next presentation is in October, Iowa tax credits for businesses. I'll have you sign up and come back there with us then. So with that, I'd like to thank Greg and Patty and Jennifer for coming to visit us here today at the University of Iowa. Thank you for seeing us. Everybody have a great week, and we will see you back here next time.
Thanks, Patrick. Thank you.